Good morning, traders and investors. My name is Roger Scott. I'm the head strategist for WealthPress. Today is Monday, February 8th. It is the first day of the second week of February of 2021. What do I always say? Let's get into it right now. Now, in terms of events, global data, and Fed announcements this week, this is actually a fairly light week. I believe this is the lightest week this year so far. I mean, this is only the fifth week of the year, so let's not get excited or too excited. Now, remember, earnings is big. We're done with about 50 to 55% of the S&P. Now we have to have the second half come out. So far, the numbers are solid. I mean, rock solid. They're good. Now, again, before you get too excited, keep in mind, these numbers have been lowered for 3 quarters now. This is the fourth quarter of 2020 we're in. Technically, as far as earnings are concerned, I know realistically we're in the first quarter of 2021, but in terms of earnings, this is the last quarter of 2020 that we're reflecting. Remember, we're reflecting on what already happened, not what's going to happen. So again, so far about 90% of stocks are beating the numbers. Tech is seeing the best performance, which is not a surprise. Retail sales is doing pretty well. Auto sales is doing well. Residential home sales is doing well. Businesses, commercial real estate, not so well. So again, not much data this week. We've got the CPI coming out on Wednesday. We've got the jobless claims, which actually went down last week, and consumer sentiment, which is an important report because it's going to reflect on retail sales. Remember, consumer sentiment drives about 70 to 80% of the GDP through retail sales. So this is going to be an important report. I think the sentiment is getting better because people are getting ready for more stimulus checks. And again, keep your eye on the jobless claims report. My fear is that the COVID variant is going to overtake the recovery that we're seeing. That's the biggest factors that I'm seeing on Wall Street. So far, that has not happened, but we are getting close. My hope is, fingers, toes crossed, the vaccines all come out before this second variant really hits us hard. That's what I'm hoping for now. So again, the big reports is going to be Thursday and Wednesday and Friday. And again, we got Jerome Powell speaking, and he's going to say interest rates are not going to go higher in the short term. But I want to show you something. This is the long-term bond. This is the 20-year plus. We're breaking lower, and I hate to say I told you so, but I told you so. That means longer-term bonds, longer-term interest rates, like the kind you see for homes, 10-year, 20-year, 30-year, they are in fact going higher because bond prices are going lower. Remember, bonds and interest rates are inverse. So if bond prices are breaking lower, that means interest rates are going higher. Now, to give you some perspective, this is a 5-year chart, and you could see here we've been going higher, sitting near the highs for a while, but it looks like we peaked out about a year ago in terms of the long-term rate, and it's been going gently higher, which is why there's been such a big rush to get for the housing market. People are rushing to lock in low interest rates because rates go back up. And remember, just because the Fed says interest rates are not going to go higher, interest rates are not going to go higher. Those are the short-term rates. In terms of long-term rates, there's still a speculative factor to where things are going to be in 10, 20, 30 years. So again, that is starting to break down, which means interest rates for all effective purposes are in fact, long-term rates are in fact going up. So car loans, home purchases, and so forth and so forth. It's as clear as day because interest bonds have been going lower now for a year, which means long-term rates have been in fact going higher. Now, in facts of global economy, analysts expect the world economy to grow this year, and earnings are expected to be positive this year for the first time since COVID started, which is about a year now. After contracting last year because of the pandemic, export-driven Asian nations, Japan, South Korea, and China are expecting to get a big boost out of the recovery. China is seeing strength right now, which is really positive. And remember, China was one of the few economies that had a positive GDP last year. Investors have been encouraged by surprisingly good corporate earnings report, which have been beaten down to death over the last year, but we don't talk about that. News that a recent surge in new COVID cases is easing. That's the big news right now. That is a big factor, and progress in the distribution of vaccines. If I had to summarize this week, it's recent surge in new COVID cases is easing, and progress in distribution of vaccine is rising. That's the big news. Now, Japanese stock market is set to close at its highest level since 1991. U.S. markets are at new highs, as you will see right now. Investors are focused on the prospect of more stimulus, which is what's driving this market, and the fact that COVID cases are declining. President Biden urged Democratic lawmakers this week to act fast on his economic stimulus, which is one of the reasons why the stock market continues to make new highs, but at the expense of lower momentum levels. And folks, I'm going to say this again. We are in danger zone. We've been in danger zone pretty much this entire quarter, since September started. Look at this. We make higher highs. Look at that. RSI, we're at 302 on the NASDAQ. RSI goes to 85, 84 and a half, 85. Now we're at 334, and the RSI can't even get to overbought levels. That's the epitome of diverging momentum and a wound up market. So folks, imagine this. If you use a rubber band, and this is how far that rubber band goes, we're like this right now. We're stretched out right now like this. So we are going higher. Liquidity is moving, but we are seeing narrowing of momentum. There's less stocks driving the price of the market higher right now. Let me show you what I'm talking about. Look at this. Notice higher price, right? You notice we're making highs. Let me show you this. Look at the number of stocks trading above the 50-day moving average in the NASDAQ. Look at that. Whoop. Lower. Look at that. Let me show you this. This is momentum levels. Look at momentum levels. Look at that. We were at 88 stocks. Now we're at 73 stocks trading above the 50-day moving average. Look at that. On 12/30, but if you look at, so that's 88 stocks, 88 and a half stocks trading above the 50-day moving average. Now we have 73 stocks out of 100 trading above the 50-day moving average. But look at the QQQ price. Look at that. Where were we December 31st? Let's see here. So right here, when we were at 313, a ton more stocks were trading above the 50-day moving average than right now, but the index is higher. That's narrowing of momentum. And you have the RSI that can't even go up to 65 when the market's making all-time high. That is one stretched out market. And I don't want to go through the same exercise on the S&P 500, but well, I'll do it really quickly. So here, we're making all-time highs. Look at that, all-time highs. But look at momentum. It'll just take a second. I can't resist. Look at the number last month. 86% of stocks trading above the 50-day moving average. Now we have 81. That's out of 500 stocks. That's out of 500 stocks. So 86%, now 81%. But price is higher. Look, we're all-time highs. So less stocks are causing momentum levels to rally. And look at the RSI. This is the SPY. Same thing. So again, folks, this is a market that's stretched out. I mean, really stretched out. So with that in mind, let me tell you, and volatility is low. Volatility went back to the base. So we are, in fact, very bullish, but in a very fragmented stage. And we have to be very worrisome because I don't like these overbought markets, and we're overdue, grossly overdue for a pullback. Not a bear market, but we need that rubber band to snap back so it can be back down to its normal level so that we could stretch it out again. But right now, imagine a rubber band, and imagine it's doing this. You know what? Let me see. I have a rubber band right here. So this is a rubber band. This is how it usually goes, right? This is how it is right now. This thing's about to snap. And what we needed to do is come back here so it can do this again, and the market can be flexible and not so stretched out. So that's where we're at right now. I needed to show you that because I'm telling you, folks, this is where I just broke it. There you have it. And that's what happens if the market continues getting stretched out. That rubber band eventually pops. Now, before I let you go, let me give you the top stocks that are rising in my ranks that I haven't been seeing. Moderna's old, Tesla's old, Baidu's old. These are the top stocks in the S&P 500 in terms of strength. Now let me show you a stock that's new here. ASML. I haven't seen this stock here in a while. ASML. Let's take a look at it. Ooh, look at that. Nice pullback here, stretching out. Let's look 1 year. Oh, I like this stock. And it's pulling back down. It just made a swing high. And the best part, it's coming back up on this relative strength scan. So if we were to go a week ago, let's see where we find this ASML. Let's see. Do you see ASML here somewhere? This is a time back machine. I'm going back a week. Yeah, I don't see it. That means it's now starting. I don't see it up here. Maybe you. Oh, here it is. ASML. I do see it. Here it is. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And now it's 1, 2, 3, 4, 5, 6, 7, 8, 9. Now it's 9th spot. Let's go 2 weeks back. How about let's go a month back. Let's see if we see it here. Do we see it here? ASML. Here it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 7. So as you can see, it's now within the first 10 spots, which is huge. And I like this stock. Ticker symbol ASML. What does ASML do? I have no idea. I'm sorry, I have no idea what it does. I know most, but not all. I know that it's given us 80% this year. World leader in manufacture of advanced technology systems for the semiconductor industry. I love it. So they make machines for semiconductor industry. Look at the 5-year return, 573%. And again, the stock is rising on my S&P chart. So it's definitely a stock that you want to put on your radar. And looking at it right now, it actually looks like a nice little short-term pullback. I like this symmetrical triangle. I'm going to have to tell my guys about this stock. I like it. Now, folks, before I let you go, I know we covered a lot of ground, but before I let you go, I'm not sure if you know this, but the most important work traders do happen before the market opens. Before the market opens. Just like I'm doing right now. The market doesn't even open for another hour and 10 minutes. But what am I doing? I'm telling you my perspective of what the market's doing. I do my analysis before the market opens so that I can execute when the market in fact is open. So I don't have to sit there and figure things out when things are moving, when my emotions are all. You don't want that. You want to trade. You want to figure out what you're going to do when your emotions are not running high. So again, pre-market trading helps investors and traders develop a plan of action for the day to stay ahead of the crazy and unpredictable markets like the kind we're seeing right now. And lately, I've been receiving helpful tips and tricks from the world's number one pre-market trader, alerting me to trades based on signals happening before the opening bell. Now, you trade them after the market opens, but you get the goodies before the market opens. So you've got plenty of time. You can prepare, get everything ready, analyze the market, see what he's got to do, get questions answered, and then place the trades after the market opens. I love it. Now, if you'd like to get in on these trades too, and who wouldn't really, just click on the link below to watch this urgent video that I put together on this new market hack. You've got to check it out. And make sure to like this video and subscribe to our YouTube channel if you're watching it on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. And again, I want you to get in on these trades. Click on the link below to watch this urgent video that I put together on this market hack. Again, we analyze the markets before the market opens, and we trade after the market opens. What a concept. But it gives you plenty of time, and you don't have to sit there looking at the screen like this all day. Who needs that, right? That's not why you got into this game. And post some comments below if you're watching this on YouTube. Bye, folks. Have a great week ahead. And remember, we've got second half of earnings. So watch the market carefully. There's going to be a lot of volatility ahead. Bye.